2018 is the year the market broke. You came here for the truth, so let me unveil that for you. Essentially, what we're seeing here is that the FANG stocks in particular had done so well this year in 2018 when many other members of the stock market did not do good at all. And essentially what they're talking about is how incredible the FANG stocks performed over the last few years. They just name a few, they name their numbers here. I'm not going to get into all that. But at the bottom it says this: the biggest names just got bigger and bigger, and the leadership became very narrow, and we became reliant on a handful of names to generate returns. And then when some of those names had some fundamental stumbles, the market was ill-equipped to deal with that. And that's exactly what I had talked about all throughout this year. You're seeing FANG stocks increasing, but the rest of the market is not looking strong, so watch out. Do not get stuck in this trap. And yet people poured their money into the FANG stocks. And today, of course, many of them are still holding on with the thought that this is the best time to add to their positions. We'll see what happens in time. Take off. Gains in particular tech stocks have been astronomical, and I do agree with that. We're looking at 2008 up until the present, showing you the increase percentage change over the past year, just giving you an idea of how real strong these stocks like Microsoft, Amazon, and Netflix have been. And we need to make it very clear about the computer algorithms and exactly the role that they have played in the markets, just showing you today roughly 85% of all trading is on autopilot, controlled by machines, models, or passive investment formulas, creating an unprecedented trading herd that moves in unison and blazingly fast. There's a lot to this, but I just wanted to show you the fact that please understand the details here when you are seeing all of these different markets going crazy in either direction. A lot of that is not human intervention. It's not people who think it's a good buy. It's computers doing that, roughly 85%. I've seen higher numbers, but of course it depends on which market we're looking at and so on. So understand what's happening fundamentally beyond what we are told in the mainstream media. Rise of the machines, US share volume by type of fund. The red line is the quant hedge funds, which since 2010, where the chart begins and goes up to present day, it has clearly increased far faster than retail has. There's no doubt about that. I mean, we're seeing all of these different robo-advisors starting, all of the computer trading that has taken place. The algorithms are really taking over the market today. And underlying all of this is a addiction to debt. Merry Christmas. Federal debt up $1.37 trillion since last December 25th, $10,000 per household. Here's the chart that goes along with it, and this is truly an embarrassment to see what has happened. It's even worse to see individuals who aren't worried about this. And if you don't think there's a problem, why not multiply the debt by 10 times, 100 times, 1,000 times, or even 1,000,000 times? Why not just let it go to the absolute maximum? To a point, it can never, ever be paid back, but who cares? Because apparently it's all fiction anyway. We owe it to ourselves and all of this business. I need that question answered, because nobody who ever suggests that type of behavior ever has a proper answer. So if you do, please share it below in the comments. If you found this video informative, please give me a thumbs up, and give me a thumbs up. You're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have it all. You can get all the details you need here, everything from the foundation and making money and so much more. Check them out at the link in the description. If you want the audiobook version, you can get that at themoneygps.com.